majority of us, credit is first generation, right? For the most part, everybody don't grow up knowing about credit. Typically, the family member brings you along the way for the rich family, right? And everybody else, we just kind of figure it out as we get bad credit. We understand that we need good credit. And when we figure out we have no credit, we understand that we need some sort of credit. So this basically right here, I know this is a real estate platform. We always talk about real estate. But for instance, I want to talk about other things that's going to make you money, and that's credit. Being able to get credit. Credit plays a big factor as far as going and getting loans, going and refi out. We talk a lot about the BRRRR strategy, right? Buy, renovate, rehab, renovate, refinance, rent, all that good stuff. Whatever the BRRRR strategy means. I know I butchered that one. But essentially, we talk about it. The one thing we don't talk about with the BRRRR strategy is credit. Because if we can't refinance out of that loan, there is no BRRRR, right? We don't own that particular property. We can't get no generational wealth without it. So what I want to talk about is credit, and exactly how does it affect us as real estate investors? How does it affect us as adults? So just anybody. Why is it important to get a good credit score, right? So when we talk about credit, basically credit, all it is your ability to pay back your payments. That's all it is. Your ability to pay back your payments, right? So we talk about good credit. That basically says that you've had a ton of loans out there. At some point in time, you had a little bit of debt. It didn't have to be millions of dollars worth of debt, but it could just be student loans showing that you're paying your student loans back in time, whether it's a credit card, house payment, car payment, whatever the case may be. You've just been able to make your monthly payment on time. And that's where I would say probably a good 40% of us sit. With that being said, everybody underneath it, right? No credit. That puts us like a question mark by our name. We haven't shown our ability to be able to pay back anything. Now, when we talk about bad credit, I think plenty of people will say bad credit is better than no credit, right? Because at bad credit, at least when you hit a certain tier as far as your credit score, banks know exactly what to do with you, right? They say, oh, you got a 580 to a 550. Okay, in that range, we're gonna give them a 15% interest rate. We're gonna give them 72 miles on the car. They're gonna need a down payment, or not 72 miles, 72 months on the loan. We're gonna need a 10% down payment, whatever the case. At least you got standards, right? Where we can put you in there. But if you have $1 million and you don't have any credit, the bank really don't know exactly what to do with you. They don't know if they should give you a great rate. They don't know if they should give you a bad rate because you haven't shown the ability to be able to pay something back. So I would definitely say get started. That's essentially what credit is, but we want to talk about how it breaks down. And I know if you're new here, my name is Jordan Aubrey. This is a Real Estate Investing Done Right YouTube channel. Obviously, this is a credit topic, but ultimately, I want to be able to tell you exactly how you can leverage your credit to be able to get major gains in the real estate world. Let's jump right into it. So right here, what I want to talk about is the credit score and exactly what's poor, what's fair, what's good, what's very good, what's exceptional, right? I want to look at these particular numbers because obviously if you're just getting started with building credit, or if you haven't learned much about credit, obviously these numbers are going. I want you to download Credit Karma, and I want you to see where your credit score lies, right? That's where you're going to do a lot of your research at, and that's a free source, free tool that you can use, that you can go download plenty of information to figure out exactly, am I in good standings, right? Am I on pace to get what I'm looking to get done, right? And get achieved. So when we talk about a credit score, it ranges anywhere from 300, which is the worst of the worst, to 850. This score is made of a lot of different things, and we'll break that down here later on in the video. But essentially what I want to talk about is the credit score ranges, so you know exactly where you are. So when we talk about poor credit ranges anywhere from 300 to 579. That's absolutely poor. I would probably put very poor on there and break it up half, but right now that's just poor. Because 580, it says fair. I don't necessarily think that's a good credit score. If you got anything in the 5 or below, right, anything 620 and below, I would say let's go ahead and call it poor, right? That because essentially you're going to get poor things out of that. You're going to be able to get some loans on some of those. Will it come with higher interest rates? Yes. Bigger down payments? Yes, absolutely. But you will still be able to qualify for some things. So this 580 says fair. And like I said, anything of less than 600, my standards, is absolutely poor. But let's look at it. Fair is 580 to 669, which is a decent return. Good credit is going to be anywhere from 670 to 739. Which is pretty good. That should be able to get you to qualify for any kind of type of car loan, home loan, anything that you may need to get a loan on in business, period. Very good at 740, 799, and then you got exceptional credit, 800 and 850. To be honest, and when you're just getting started, you're not going to be able to attain that 800. That 800 is a 10-year road, probably more like a 7-year road, but essentially that's what it is. It's a long journey. It's a marathon. It's not a sprint there. You can't sprint there. You can sprint and get to that 700 range pretty darn fast, depending on how many accounts you got and all that good stuff. But as far as exceptional credit, the 800 club, that's going to be a 10-year history. You're gonna need a lot of credit on that particular round. So just bear with me on that. Don't be in a rush to that. But at least now you know just the standards as far as what you need to have from a credit perspective to be able to go out and qualify for some of these bare method strategies where you can buy and hold some of this particular real estate, right? So this is some good stuff that I think everybody needs to know. Now we'll jump right over into what makes up the credit score. Let's talk about it. So right here, we're going to be talking about the credit score, what breaks down the credit score, what all goes into a credit score. That way you know exactly what you need to work on in order to hit the 800, the 700, the 750s, right? To have that great credit score, you're going to want to know exactly what goes into it. Because if you don't, right, how can you hit a target you can't see, right? But with this, when we're talking about a 750 credit score, what all goes into it, you need to know these numbers. That way you can figure out what's right or wrong, right? So let's jump right into it. So amount owed is very, very crucial when we talk about a credit score, especially when it comes down to credit cards. A lot of people just say credit cards are bad, credit cards are this, credit cards are that, right? Point blank period is that credit cards are a great tool to actually go out there and get to be able to build credit. When I hit the 700 clubs, it didn't take long. Once I started applying for credit cards, and before you know it, I had like 10 different credit cards in a matter of 2 years from just going out applying for different credit, crazy credit line increases, all different type of things. But I was in an industry that was known, if you had bad credit, you was looked down upon. It's called the car industry, right? Because a lot of people come in there and can't get approved, and people look at them bad and sad and all that good stuff. So I found out, I got around financially smart people, and we talked about credit cards and credit utilization. When we talk about credit cards, one thing people say is get a credit card, spend some money, and go back out and just make those minimum payments and you'll build your credit score. That is true because of the history that you'll gain from making your payment. That is not true from the standpoint of using all the money that's on the line of credit, right? Or on the credit card, because essentially that's all it is. It's an extended line of credit that they're offering you at this period of time. And then essentially what you're going to do is go out there and show that you're responsible with this amount of money. Well, we see this is a 30%, right? This is the second biggest out of all of them, only behind payment history, right? So if you go out here and they give you a $300 credit limit, which 90% of creditors are going to do, give you a $300 credit limit on an entry level credit card, and you go out there and spend $300 and then you make a minimum payment, well, your credit is going to take a big dip because your available credit, which is $300, is now maxed out. I know you guys heard terms maxed out credit card. That's what it's talking about. You use all the available limits there to spend with that particular credit card. So in that instance, you want to stay below 30% and ideally 10%, right? You want to be below 30%. That's a good sign, right? That's going to put you in the green, but you literally want to stay below 10%. If you can get your debts, your credit card debts, which is a terrible debt to get in anyways, if you can get that debt down, essentially you're going to be in a position where you're going to be able to get down lower to 10%. It's going to be even better because it's showing you that, yeah, we're extending you $300 to borrow, but you're taking care of that $300 by only spending $30 or yeah, only spending $30 and keeping that down. That way, essentially, you're still using your debit card while still building history with that particular bank. Let's go into payment history. Payment history is a big one. The reason why is because it's your ability to show that you can pay in a timely manner on time. Now, if you have late payments on your credit, it's not the end of the world. Typically, after 2 years, it have a very minimum effect on you, right? If the last time you missed a payment was 2 years ago, you probably want to still have somewhat high 700s, or not high 700s, high 6s, low 7s. You're probably still going to have a good credit. You're still probably going to be able to go into a bank, get your home. You're probably still going to be able to go get your car and don't have to worry about it, not have to worry about paying crazy interest fees, right? But essentially, this is a very, very important step of it. Pay your bills on time, right? This is a number amount owed. We can change that in a month, literally by taking all your money and paying down your cards, right? But making payment history, you can't do that. You got to do that month by month, right? You can't do that immediately. That's something that happens over a period of time, and this is where that they actually see if you can pay them back, right? If I'm going to extend you a 10-year loan, but on every loan that you have, you're going south, or you got a late payment on every single account, you're probably not somebody I want to extend business to. Or if I do, how about you give me a big down payment because you're considered a risk at this particular point in the moment, right? So if you got some late payments on your credit, make sure you don't miss it the next go around. That way you can qualify for some better things. So let's jump into the next one. Okay, so let's jump into the next one. We got types of credit. Now, I know you guys are thinking about types of credit. We just talked about the credit score. What are the types of credit that you can have? Well, a mortgage weighs different on a credit report than a car loan. Same thing for a credit card, right? These tote-to-note shops that don't report to your credit, that's going to weigh a little bit different on your credit score. Same thing with these advanced cash payday loans, right? That's going to show up differently on your credit report. Closed accounts are not going to, that's the type of credit. You got some credit, but it's a closed account. It's not revolving, meaning it's not going on and on and on. It's one of those 6 months loans that you went and took out. Every time a credit account closes, that's a negative effect on your credit score. Now, you didn't miss a payment, so it's not that bad. Hence why it's just a 10% of your credit account. But closed accounts aren't good things on your credit. What you want to see is revolving credit. That's what banks want to see. Something that you're paying constantly over and over and over and over. That way they know that you're still current on your history. Your history is still current. You're still making payments. You're still doing the right things by these particular credit cards. That way we can move on, right? With that being said, just understand mortgage weighs different, car weighs different, revolving credit line, all that is good. You want something that you're steady paying on. If you're getting a house note, the only way you'll be able to get a house note without having any type of credit is if you got a lot of money, right? But you're going to get an affordable home, something that your income outweighs what you're buying. But typically in other instances, different things revolve or look totally different on your credit report. So just understand that when you're going in and getting that new home, type of credit actually makes a difference. Credit card is probably one of the best that you can actually have on your credit report. Age of accounts. This is very big. I wouldn't say it's a necessity, but it's very, very big when you're talking about it. It's 15%, so it's higher than everything outside of amount owed and payment history. But age of accounts, they just want to know, how long have you been doing this? How long have you had a history of always taking care of your business, right? How long have you had a history of making those payments on time? How long have you had a history of making sure your usage was down as well, right? Wasn't spending a lot of money. How long have you had a history of going out there and making sure your car note was paid on time or paying it off early? Well, what do that history look like? So this is a very big one. But as you can see, 15%, right? If we was just to wipe this out and put 0, obviously we're going to be at 85%. So I say that to say this: if you was just starting off today, you was just starting off a year or within the last 2 years, right? That history really isn't going to be there. All right, you got 24 months if you did 2 years ago, 24 months of history. That's not a lot of history, guys, right? Start today, I promise you. In 10 years down the line, you'll be grateful you started today because that history will be there. And now you'll be closer to that 800 credit score that we was talking about over there. So just understand that history is one of those things you can't really rush. Age of accounts, you can't really rush. It's just time will go by and eventually you will have it. But you can't skip the line when you're talking about that. New credit, this is very big. And the reason why new credit is very big, because we want to know, are you just looking to get some more money and get some more money and get some more money? Why aren't you being responsible with the money that you have, right? A lot of times you can fall victim to this because you can just start getting you a new credit card and they just gave you an increase because you've been with them for 90 days. And all of a sudden you want to go out there and see exactly, well, can I get a new credit card, right? They just gave me an increase to $1,000. Let me go get another credit card, see if they give me another $1,000. Let me go apply for another one. So you got to get away from the new shiny objects. I always say apply for the credit you need, not necessarily the credit you want. And I say that from a standpoint of just understanding and knowing the time. That way you don't have too many new accounts out, because a lot of times we go out there and we just want to get credit cards just because we want to get credit cards, or we got great credit. Now we want to go out there and buy some new car, nice shiny object, right? With interest is low, but we're still maxing it out as far as how much we can pay a month, which is not a good idea from a financial behavior standpoint. And ultimately, the only way to get great at any of these, you got to have great financial behavior, and this is ultimately a credit score. That's what that's going to make up for you. It's going to talk about your financial behavior moving forward. So that's what I want to talk about as far as the breakdown of credit. Now we want to jump over to this other side and just let you know the types of credit things you can do today to get started to improve your credit score. That way, essentially, you'll be able to use it down the line to refinance some of these homes or get some of these larger lines of credit. That way, you'll be able to make your move and get closer to that $1 million range. Let's go. Okay, so in this particular portion, what we're talking about is just different types of credit that you can go out today, start applying for, getting approved for, to ultimately be able to build your particular credit profile, your history, and everything that goes into it, right? So first and foremost, I say credit cards. Now, back in the day, this was probably when I first graduated, I talked to you guys about, I worked in a profession in the field where bad credit was looked down upon, that was car industry. In that particular instance, I was finna get married, so it's probably, I got proposed 6 years ago, and I got married 5 years ago. So in that instance, right, this was probably 7 years ago when all this was coming about, but I knew this is what I wanted. I wanted to get great credit so I could go out and buy a house, buy a car, whatever the case may be. I'll be able to provide for my family. So with that being said, what was the easiest way for me to start building credit? Apply for a credit card. Apply for a credit card. Now, a credit card is a good and bad thing. The only reason I say it's a bad thing is because money behavior can get you in trouble with credit cards, right? Credit card debt. When you have great financial behavior, at that particular point, you don't have to worry about a credit card because you're going to take care of it regardless, as if it was your own money, right? So if you don't have it, you probably won't swipe the credit card. Or in other instances, a lot of people, especially young adults, especially 18, 19, 20, we only want to look good. We're still in the child mentality. We're still trying to look good in that particular essence. In that particular instance, what we'll do is we'll actually, with the credit card, go buy the next nice new shoes. We'll take every credit card we can get from the stores, the lines of credit they allow us. We'll take those lines of credit, go do all the shopping we can, and then just make monthly payments on it, which isn't good, right? So with that being said, credit cards are good, but which credit cards do you want to use? Any credit card from a major bank. I would say probably Chase Bank has the best credit cards out there. They're pretty lenient. They want you to have somewhat of history on them, but they're probably some of the best credit cards out there when it talks about perks of actually having credit, reward points, spending money on things you're going to spend money on and actually get rewarded for. One thing I would say to that is Capital One is the one I use, right? Just speaking on experience, Capital Ones I've used. I've had the credit card for probably 6.5 years now. Got another Capital One credit card. Capital One isn't really good at giving great credit limits, but it's what I still have. That card actually make me money, and that's probably another topic for another day, but it actually make me money like a cash flowing rental. But essentially, it's a great starting point. They'll start you off with $300. After 3 months, they'll allow you to go and do a credit line increase. They'll take a look at your credit, see if you're in good standing. If you're in good standing, they'll bump your credit line up. So be understanding that they're going to start you off with small limits, but at least they start small, they go to larger. Typically, store credit cards, they're going to start you off a little bit higher, typically. But in that instance, store credit really doesn't give you the great mix of use that you want for your credit score. So when I talk about store cards, I'm talking about the Macy's, the Kohl's, Marshalls, JCPenney's, things like that, just normal store cards that you'll get offered in the mall, right? It's not really going to do a lot for you. Now we talk about home loan. That's a big one. It's your mortgage, primary residence. It's a 30-year loan, so it's definitely going to build some history on your credit report. Obviously, you get started today is one of those things you can't speed up through. You get started today, and in 15 years, you'll be grateful that you bought a house, right? You have that history that you can lean back on. And a lot of people, once they get their home loan, they cut off everything else because essentially they got 30 years of payments right there on one account. I don't recommend that for anybody, but I'm just saying a normal household people, they build the credit using the credit cards, they get the home loan, and that's essentially all they ever wanted anyway. So that's really the only thing they have. Lines of credit, this is great for real estate because it allows you to go be able to go buy those big particular homes. How do you get it? You gotta have great credit, right? Great credit and anything backing up with a W-2 or tax returns. Typically, if you got great credit and tax returns, you should be able to go get a line of credit from any bank out there. And make sure you just build a history with that particular bank. When I say history, open up a checking account, put some money in there on a monthly basis, have a direct deposit, get you a savings, put some money in the savings, have money sitting at the bank on hand. Or even if you're a business, which I do a lot of, if I'm a business, if I just start a relationship with that particular bank, I'm going to go into that bank and I'm going to sit a lump sum of money in that bank, and I'm going to let it season over time. That way they know I'm always putting money here, I'm making deposits on the regular. They see the money there. That way when it comes down to asking for a line of credit, now they see that, okay, you've been responsible with our bank, with all the history that you have with our bank. How about we go ahead and extend the line of credit for you? Another thing you can go get is a car loan, which is phenomenal. It's a great one. This is what I started my profile with, right? I had credit cards and I had a car loan. I couldn't get any other ones because I was just too new. But as far as a newbie, car loan is a pretty easy one to get. It's one you can get a cosigner, but I'm pretty sure if you get the credit card, wait about 6 months, get your credit limit increased, get you maybe two credit cards, maybe 3 credit cards, depending on where you are. You should be able to get that car loan with no cosigner at all. I think I had a cosigner back when I was in college for my car, but outside of that, as soon as I became an adult, I've never had to get a cosigner on any of my cars, but it's just because I've had history. You can look at my report. I can go into a dealership right now and walk away with 0 down. I don't have to come up with a payment for the next 60 days because of the history that I built along the way, right? So that's very important moving forward. But these are just some types of credit that you can go out there and apply for. So we're keeping it brief, but essentially this is the entry walkway to be able to invest in real estate. I know we always talk about investing in real estate with no money down, but essentially when you get your things together, if you're wholesaling making a lot of money, you're gonna wanna get your credit right. That way you can start buying and holding and becoming a landlord, multiple properties, multi-family units, whatever the case may be. That way you'll be able to make a move and actually be put in a position where you can go out and do more and have more because your credit in a situation where to take care of itself, right? So with that being said, you guys know the slogan around here, keep winning. Hey, and before that, make sure if you like this content, subscribe to the channel if you feel like there's something you may be interested in, especially real estate investing. We dive deep on that all the time. Make sure you give me a thumbs up for the video, liking the video. And again, drop in the comments what you want to hear next, what you want to see a breakdown as far as credit. We're going to be dropping anything that can help you win in the future. Hey, so with that being said, keep winning.